Welcome back to Dinar Community Channel. They tried to keep it buried, hidden behind closed doors, locked inside classified memos, and buried under layers of financial red tape. But the truth is out. The IQD revaluation was never just a rumor, it was a plan. And now, that plan has been exposed, changing everything for those who dared to believe. This IQD development was never supposed to be public, at least, not yet. For years, the Iraqi Dinar IQD revaluation discussion has circled inside a tightly knit circle of economists, policy analysts, and a few daring investors. Quietly, methodically, and without fanfare, Iraq's financial machinery has been turning behind the scenes. But now, a leak from within one of the central monetary planning teams, along with verifiable activity at major international banks, has pushed the narrative into the public arena. The story unfolding isn't about speculation anymore. It's not about rumors or unconfirmed forum posts. What's happening now is a historic unraveling of secrets long buried beneath layers of policy drafts, oil contract clauses, and post-war economic rebuilding plans. The Iraqi dinar, long dismissed by traditional financial media, is now at the center of a much broader economic shift, a shift that might redefine how currencies regain global strength after decades of imposed instability. What few knew, until now, is that the revaluation plan has been part of Iraq's financial roadmap for years, deliberately kept under wraps to avoid premature market reactions. Quiet signals began to emerge over the past 18 months. The Central Bank of Iraq (CBI) quietly updated foreign exchange reserves, restructured key debt positions with the IMF, and moved toward a digital banking infrastructure, all while maintaining a static public exchange rate. It was a masterclass in strategic patience. But everything changed the moment a confidential banking memo surfaced, reportedly confirming coordination between select Tier 1 financial institutions and Iraqi financial officials regarding a staggered revaluation model. The memo, circulated internally among banking executives, hinted at a dual-layered rate rollout, an international rate adjusted for Forex markets, and a sovereign rate used for internal asset-backed transactions. Such a structure would allow Iraq to manage both economic inflation and public sentiment without risking currency collapse or speculative chaos. This leak, followed by a wave of irregular banking behavior, signaled to informed IQD holders that something monumental was about to surface. Multiple private exchange reports began to pop up in verified investment circles. High-net-worth individuals with dinar holdings started receiving quiet invitations from wealth management arms of institutions like Wells Fargo and HSBC. These, initial redemption appointments, though not publicly confirmed by the banks themselves, seemed coordinated, triggered not by market conditions but by the rollout of a long-concealed plan. Then came the floodgates. Independent analysts began noticing unusual Forex fluctuations involving the IQD, small movements in paired trading volumes with the euro and British pound, which historically remained dormant. This was followed by cross-border contract renegotiations by oil companies operating in Basra and Kirkuk, where clauses now pegged payouts to adjusted currency metrics instead of the traditional fixed dollar valuation. That detail, though buried in legalese, was a red flag for those watching the dinar. By this point, speculation turned into informed inquiry. Former U.S. military contractors, many of whom were paid in dinar during the Reconstruction period, began to consult wealth managers en masse. Long dismissed as holding worthless paper, these individuals now saw their investments recognized and, in some cases, quietly processed. The narrative began to shift from, "What if the dinar revalues?" to, "Why are some people being invited to exchange early while the general public is still in the dark?" What most people don't know is that the IQD revaluation isn't just an economic maneuver, it's a geopolitical reset. The strategic implications of a strong Iraqi dinar go far beyond oil revenues. It touches everything from Middle East power dynamics to trade leverage with Asia. A stable, asset-backed dinar realigns Iraq's regional influence, allowing it to participate in bilateral and multilateral agreements with significantly more weight. In the grander scheme, it positions Iraq as a central node in what many believe is a broader global realignment of financial power. One must also consider the timing. The global economy is at a tipping point. Inflation fatigue, central bank policy reversals, and a collective reassessment of fiat currency strength are all factors fueling the momentum. Against this backdrop, Iraq's emergence from the economic shadows with a revalued, stable currency is not just symbolic, it's catalytic. Back in 2003, when Iraq's currency system was shattered and rebuilt from the ground up, few could have predicted that the dinar would ever again play a significant role on the world stage. Its reputation was tarnished, and confidence was shattered. The new banknotes issued under the Coalition Provisional Authority were a bandage, not a cure. But over the years, as oil revenue trickled in and the country slowly stabilized, a new generation of financial leadership began mapping out a different future. That future is now colliding with the present. As of mid-2025, multiple banking institutions have confirmed that infrastructure for an IQD adjustment is fully operational. Private wealth advisors have reported internal memos instructing staff on how to handle incoming IQD holders post-RV. Bank systems have updated currency codes and rate calculation modules behind the scenes, though no official rate has yet been publicly listed on Forex boards. Some insiders claim that the new rate will be released in stages, beginning with contract redemptions, followed by sovereign government transactions, and then a public rollout for retail investors. Still, with all this momentum, why the secrecy? The answer lies in the chaos of unmanaged disclosure. If Iraq had announced the revaluation prematurely, markets would have surged uncontrollably, speculative frenzies would have ensued, and the country's economic rebirth could have imploded before it began. By keeping things tightly controlled, initiating private redemptions, testing digital systems, and securing trade partnerships first, Iraq is executing a strategy of slow burn rather than sudden explosion. Now that the curtain has been pulled back, even slightly, the public interest is exploding. Social media forums are buzzing. Financial YouTubers who once dismissed the dinar are now posting urgent, update, videos. Telegram groups have exploded with theories, timelines, and testimonies from people allegedly contacted for exchanges. And yet, amidst the excitement, danger still lurks. Scammers are exploiting the confusion, pushing fake redemption centers, fraudulent appointment schedulers, and black market rate schemes. It's a high-stakes environment, one where legitimate breakthroughs and blatant misinformation sit side by side. IQD holders are now being urged to verify everything, avoid third-party middlemen, and wait for official confirmations through banks and licensed advisors. Another layer to this unfolding event is the IMF's recent posture. Though they've remained tight-lipped on Iraq specifically, their latest regional report highlights currency stabilization mechanisms being deployed in high-potential emerging markets, an unmistakable nod toward Iraq's situation. Analysts speculate that the IMF and BIS have been quietly supporting the revaluation behind the scenes, offering technical and legal frameworks to prevent systemic disruption. So, where does it all go from here? If you hold IQD today, this moment is unlike anything you've experienced before. You are standing at the edge of a financial turning point that was never intended to reach you this soon. The original plan, according to several insiders, was for this development to remain under wraps for at least another quarter. But leaks, digital banking activity, and a global hunger for financial reset forced the narrative into public view. You're now in a window of extreme opportunity, but also critical risk. Decisions made in the coming days could define the next decade of your financial future. From securing proper legal advice to carefully structuring post-exchange planning, the details matter now more than ever. Structured payouts, tax shelters, asset protection, charitable foundations, these are no longer hypothetical discussions. They're strategic necessities. What happens next depends on both global coordination and individual preparation. Iraq's leadership has already indicated that the dinar will not remain pegged indefinitely. They envision a float, managed at first, then progressively freer, as the economy integrates more closely with regional and international markets. That means rates may fluctuate over time. Early exchangers may benefit from stability, while long-term holders could see even higher returns if volatility is well managed. In many ways, this revelation about the IQD isn't just about currency, it's about timing, vision, and trust in what was once unthinkable. The silence that kept this development hidden wasn't accidental. It was strategic. And now that it's out, the door cannot be closed. Investors, prepare accordingly. The IQD was never meant to be a public conversation until it was ready. Now, it is. Like and subscribe for more videos.